Thanks for clicking. As Canada's real estate market continues to shift downward, we're hearing more and more stories of distressed deals, with buyers trying to back out of deals and lawyers preparing for a flood of new clients. With falling real estate values, buyers are finding themselves increasingly unwilling or unable to fulfill their obligations, and lawyers are reporting an increase in the number of buyers and sellers wanting to understand their rights and responsibilities should their deals go south. Well, we've discussed on this channel at great length how to protect yourself in a real estate correction and how the number of distressed deals are starting to add up as Canada's real estate market shifts. A recent case in Vancouver shows a buyer who seemingly did everything right, but still almost got burned by a bank error. So what I want to do today is go over this case of a first-time home buyer in Vancouver, take a look at how the case was resolved, and then go over some steps for home buyers to avoid cases like this in the future. We're expecting a big week in Canada's real estate market next week, with the inflation data set to come out on the 16th, and we're also expecting the nationwide real estate data for July, which should give us a much better idea of where our market is heading. We'll obviously have updates out on both on this channel. If you want to get those updates, make sure you click like and subscribe, but for now, let's get into this case in Vancouver. Onto the case. According to the Vancouver Sun, first-time homebuyer Jacqueline Schaffer entered into an agreement to purchase in May of this year with a closing date set for early August. However, the credit union failed to order the appraisal until 10 weeks after the initial purchase, and with the market shifting quickly, the appraisal value came in much lower than the purchase price, forcing Schaffer to come up with the difference. And we've talked about this on this channel before when appraisals come back light. If you purchase a home for $100,000 and the bank has agreed to finance 80% of the purchase price or the appraisal value, but the appraisal value comes in at $80,000, the bank is only going to finance 80% of that $80,000. So they will provide a loan of $64,000, leaving you to come up with the $36,000 to get to that $100,000 purchase price, when initially you had only planned on coming up with a $20,000 down payment. In this case, Schaffer had purchased the home for $326,000 on May 9th and planned on putting $65,000 down, or 20%. However, with the appraisal not being ordered until July 19th and not coming in until July 28th, the appraisal came in at $310,000, or 5% less than it was worth at the time of purchase. So, with the appraisal coming in light, Schaffer was forced to come up with the additional $13,000. And remember, she found out this news on July 28th. The closing date was for August 4th, and the Monday was a holiday. So this left Schaffer with 3 days to come up with the difference in funds, all due to the credit union ordering the appraisal 10 weeks after purchase. In the end, the credit union offered Schaffer a $13,000 line of credit at 4.75% to borrow the needed $13,000 to make the down payment work. The credit union also allowed Schaffer to keep the $2,000 promotional cash bonus and threw in $175 worth of gift cards to Canadian Tire, Home Depot, a gas card, and Starbucks.
That's generous.
So, Schaffer did end up getting her home, and to a certain extent, I suppose it worked out, despite what I'm assuming were a few sleepless nights on Schaffer's part. However, Schaffer had a few assets going for her that are not necessarily going to be present in every case. First, mortgage amount. Schaffer was pre-approved for a purchase price of $375,000, but only purchased for $326,000. So she did have some room in her debt ratios to allow for a borrowed down payment. While the credit union did essentially advance Schaffer a borrowed down payment in the form of a line of credit, she would have had to have room in those debt ratios to service that line of credit. That would have been a requirement of the mortgage. So it was good that Schaffer had some room left in her debt ratios, but had she have already been maxed, the situation could have turned out very differently. Second, this credit union allowed for partially borrowed down payments. Not all lenders allow for that. Some lenders require that 100% of the down payment be either gifted from an immediate family member or come from your own funds, from your own saving. They won't allow for any borrowed down payment. So regardless if she had room in her debt ratios, the fact that this credit union allowed for borrowed down payment was also a major asset going for her. Had the credit union not have allowed for a borrowed down payment, Schaffer would have had basically 3 banking days the Tuesday, Wednesday, and the Thursday to secure another mortgage with another lender that did allow for a borrowed down payment, would approve the appraisal, re-instruct the lawyer, etc., which is quite a hectic 3 days if it can be done at all.
You can do that. No problem.
So, Schaffer did have room in her debt ratios to borrow the additional down payment, and Schaffer was with a lender that would allow the borrowed down payment to begin with. Not all buyers are going to have these two major assets going for them as the market continues to shift. And this is why, and we've talked about this before, I always recommend a conditional offer, especially in a shifting real estate market. Had there been a conditional offer in this place, it would have set a timer off with the bank. You have X days to complete this deal, to verify the value and to verify income and to verify down payment. You have X amount of days to get all of these things in order, and if this is not in order at the end of this period, then the buyer has the options to back out of the deal. So ideally, the offer to purchase gets brought to the credit union, showing that there's 5 days to get the appraisal, to get the income, and to get down payment in place. The credit union starts the timer, and whoever's looking after this application, the underwriter, gets things going. And then if it's not done on time, then the home buyer, in this case Schaffer, can ask for an extension, or they can choose to opt out of the deal.
You had your chance and you blew it.
And it's not like it was for the past couple of years in Canada's real estate market, where conditional offers were basically dead on arrival. Conditional offers are becoming more and more the norm in Canada's real estate market, with even some real estate brokerages suggesting them on their website.
How could this happen?
So this is a case where the home buyer did seemingly everything right and still almost got burned by an error on the part of the credit union. She very well could have been sued had they not been able to put something together in the final moments of this deal in those past 3 days. And as we've seen, that's not going to be the case for every buyer. So I cannot stress this enough, that conditional offers are there to help the buyers. They're there to help the sellers too, as you can be confident that this house will close. But definitely for the buyers, not only do they protect you and ensure that your finance conditions, that your financing is set in stone, that your financing is 99% as sure as it can be prior to the day of close, but they also set the timer off with your bank lender. Your bank lender can't wait around. Your bank, your credit union, your mortgage lender can't wait around for 10 weeks. They know they have to get everything in place by a preset date. And if they don't, there's a minimal consequence to the buyer beyond not getting the house, beyond not getting the property. With that said, the real estate market is continuing its downturn. We are going to continue to see these shifts, and unfortunately, we will probably continue to hear more and more cases like these. I know I have been in my market in London, and I'm sure others have as well. But we will continue to have updates out on these market shifts on this channel. If you want to get those updates, make sure you click, like, and subscribe, and thanks so much for watching.